Hi guys, Mark Carney, the former Bank of England governor, basically issued a "I told you so" when it came to the impact Brexit is having on the UK economy and its role in the recent hike in interest rates the current head of the central bank imposed on Thursday. Carney back in 2016 predicted Brexit would be detrimental to the UK economy and did everything in his ability to mitigate against the damage during his tenure. Here he was reacting to the news of the biggest hike in 100 years and why he was right about Brexit's impact.
You wrote recently about the impact of Brexit on the economy, and you made this comparison between where we are and where the German economy is. Did you overestimate that difference? Quite a lot of people took you to task publicly about it, essentially saying that you ignored the currency aspect.
Well, look, the currency moved. The UK currency, sterling, moved against all major currencies from the point at which the referendum was called, and then it moved more sharply after the referendum result. It hasn't recovered. It's fluctuated around, but it has not recovered. And a core point people often use, and now we're going to get into technicalities, something called purchasing power parity exchange rates opposed to market exchange rate. The market exchange rate influences our ability in the UK to buy goods from abroad, obviously. That's the one that ultimately matters. It's relatively rare that you get big differences between the two and persistent differences between the two, but you get them when you have a long-standing shock to productivity in the economy. And that is, unfortunately, what we're getting in the UK. It was predicted that we would get that. It's coming to pass. And to loop it back to the challenges that the Bank of England is facing, it's one of the issues the Bank of England is facing. And if I can actually cast your mind back to a few years ago, this is what we said was going to happen, which is that the exchange rate would go down, it would stay down, that would add to inflationary pressure, the economy's capacity would go down for a period of time because of Brexit, that would add to inflationary pressure, and we would have a situation, which is the situation we have today, where the Bank of England has to raise interest rates despite the fact that the economy is going into recession.
And there you have it. So back in 2016, the pound was hurt by the fact that there was going to be, before the referendum even took place, when the referendum was called, the pound was harmed, was hurt. Then in 2016, when the referendum took place, the pound has not recovered against the euro. Now, it's been up and down, as he said, but it hasn't recovered to pre-2016 levels, which means that as the UK imports a huge amount of goods, food included, from the EU, it's more expensive because you're paying, you're converting your currency into euro, and it's worth less than it was before 2016. So you're experiencing higher costs. And now with the other aspects of Brexit, so back in 2016 there wasn't the problems with trade, there weren't the barriers to trade. Now there are those barriers. It's extra costs that businesses have to pay. So you have the currency on one side and you have the barriers to trade on the other. And this is making it much more expensive. And this is driving inflation to a certain extent. Now, the Bank of England and the politicians are instead talking about the war in Ukraine and energy prices. And of course, that does have an impact, a massive impact. But there is something that is artificial in a sense. Brexit is the artificial impact because Brexit is not necessary. It was not necessary to impact the UK economy this way. And it can be undone. We all know how it can be undone. But no one wants to talk about that. The politicians in the Conservative Party and unfortunately the Labour Party don't want to talk about how to undo this damage. You know, we don't have any control over what's happening in Ukraine. We don't have any control over the price of gas, or very limited control over that. But the Conservatives have complete control when it comes to rejoining the single market. Now, attempting to rejoin, of course, it depends on the EU. But even if the Conservatives said tomorrow, yes, we're going to rejoin the single market, this would actually boost the pound. It would boost the economy because it would show that UK business, it would show to UK businesses that the British government are taking this seriously, that they're actually considering rejoining, and this would show that it's open for business, not closed to business. Carney was right back in 2016. Brexit is going to have a detrimental impact on the UK economy, and he's been proven correct. Let me know in the comment section, guys, what you think. As always, your comments are greatly appreciated. Thanks a lot.